Good afternoon, everybody. It is Monday night, about a half an hour after the market closed on November 2nd. Hope everybody had a nice holiday weekend. A little bit of an interesting market today. Obviously, after the carnage that we had on Friday, today was going to be most likely a choppy day. Once you get that kind of extreme volatility, usually it'll revert back to the mean and have a little bit of a consolidation or a pause before we take off again, or possibly have a change of trend. And today's action was interesting. It was going to be very hard to get out of yesterday's or Friday's trading range in the VIX, as you can see here, but we actually did eventually push through that level in the afternoon, but we didn't stay there. Um, as far as the VIX today, we've been talking quite a bit about the VIX and how it's been leading us in one direction or the other, and this change of trend in the VIX leading to the sell-off today was pretty obvious. So why don't we just start out with talking about that? Here's today's high in the VIX. You draw a trend line, as we said. Here's the low. You run it through the previous high to the low without crossing any price action. Obviously, this is the high, but you don't want to go through to price action, so that's where it is. Now, once you cross the trend line there, you have a high and a retest of the low. So technically, we are actually right there. And you have the low. So in between that box is what's going to be the next move in the market, which actually coincides with 11 o'clock to 12 o'clock. So this down move, we were up about 130. We crossed the trend line. Then we go into this trading range here in the VIX. And one of two things happens. You head down this way, you continue the rally. You head up this way, the rally stops, and you start to sell off. And you can clearly see here, right around 12 o'clock is when the short selling came in a big way. And you can see once we got up to the prior day's high, the market, as we'll see in a couple of minutes, chopped around. So again, we keep talking about being prepared for these opportunities. Now the question is, we had the first hour of the day, the market opened higher, continued to go higher, and those were the easier trades in the morning, right up from 9:30 until around, I'm going to say around 10:45 when we crossed the trend line. And then really the next obvious trade was 12 o'clock to 1 o'clock. So we had about 2 hours worth of trading today. So keep these numbers in mind that I'm telling you. We don't have 6.5 hours worth of trading. Basically, we had about 2 hours worth of trading today. So we had longs until around 10:45, and then good aggressive shorts from 12 to 1. We actually pulled back and retested that high, so you had another move from 1 to 2 as far as another short sale opportunity, and then we actually traded down again, and you'll see the market kind of drifted. So this here is really the big thing I want to focus on right in there. So we work our way out to the charts here. We had a couple of things happen today. Here's yesterday's high and yesterday's low in the spiders. You can see we open up higher here, open up higher, and open up higher. This first pause here is a pretty good spot to look to initiate a long. But here's the big thing that a lot of traders missed today. Okay, this long trade on the 15-minute chart was still a short sale on the hourlies and clearly a short sale on the dailies. We're below the 20s here. So any trade you took long this morning had to be a scalp. Could not have been a long aggressive trade because there was no reason to be long aggressive. We're on all of this selling order flow for the last 6 or 7 days. The second thing that kicked in here was what happens here. New lows in the spiders, new lows in the NASDAQ. We do not make new lows in the Dow. So we have a buy divergence here at 1 o'clock, clearly from the Dow. Okay? Not only do we have a buy divergence at that point, but here from 12 to 1 is when we keep hitting this double top or a resistance level, which is the 2-day resistance level in the VIX. So you had a lot of reason not to short sell aggressively there. You had the buy divergence and you had the VIX at resistance. All right, now what I want to do is I want to go into a couple of different things. I want to look at, I have about 5 stocks on the list today, but again, the whole point of these videos is for you to recognize this price action when it's unfolding. And one of the things I want to talk about in JP Morgan that I went over with somebody in an email today was it's one thing to have a good scenario. It's another thing to set up the risk reward after you develop the scenario. And I'll explain to you what I mean by that in a couple of stocks. I'm going to get right into JP Morgan as the initial stock that we're going to talk about here. And you can see I actually have this window here that I want to talk about. First off, let's talk about coming into the day with JP Morgan and whether your bias would have been long only or short only. Well, coming into the day, we're below the 20, we're below the 50, below the hourly, below the 15. Clearly short only with the aggressive trades. So what happens? The market opens higher. Well, let's take a look at what that means as the market opens higher as far as this stock and where we are on the expectation scale. Are we high in the expectation scale or away from it? Well, we're below the daily, 20, 50, and clearly below the hourly. We have this one momentum push to the upside. Okay, so let's say you get involved. Pete says, look for these 20-cent pauses, and they're the best trades on the planet. Okay, they are. But this is at best a momentum trade. At the very best, it's a momentum trade. You have nothing more than the 5-minute and the 15-minute on your side. And even that being said, the 15-minute is still pointing down to sideways at best. Okay? So if you got involved in this, there was no reason to get hurt. It should have been a smaller profit expectation and a smaller loss because you're still trading against all this higher time frame order flow. And a lot of stocks played out that way. Now, let's get into talking about what could have been done today. Stock sells off pretty heavy once the VIX, actually, again, here from 12 to 1 o'clock, when the VIX has that change of trend. You would not have been caught on the wrong side here when we broke the trend, but that's another thing, putting those pieces together. I want to talk about this window here, okay? Here's the first pullback off of the lows. This is an excellent trade here. Let me actually zoom this out a little bit. Pull back off the lows, completely below every time frame now. Now it goes up the expectation scale a lot higher than that previous dopey long when it was nothing but a momentum trade. Now I say dopey because you only had the minimum requirement. That doesn't make it. You want to go after the best trades, all right? Here's a great trade. We're below, and now there's a big push down. You got to trade the first pullback off a new higher low. Here's the new low. Here's the pullback off the low. This from here, 42.20 to 41.50 something is a good trade. Now, what I want to point out is what happens next. What happens from here to here? I can hear you saying I'm not sure, so I'm going to ask you anyway. We don't make a new low. We fail to push down and make a new low, which automatically will tell you that order flow is not as strong as it was. If it was, it should have pushed through to new lows. So we had a couple of traders take this trade right here. Bearish U-turn, looking for a short sale. Well, is the scenario good? Yes, the scenario is excellent. Is the risk-reward good? No, the risk-reward is horrible, which makes it a bad trade even though it's a good scenario. What's the profit potential here? A retest of a double bottom that we couldn't get through the last time? Definitely a short sale, not a short sale here. This one's a good one. We have a retest of the low, and if it breaks through the low, if order flow is still good, you got a lot of profit potential breaking down on the daily charts. This one is horrible. Short sale here. Where you going? You got support here and support here. The only next trade in this stock would have been if it took out the lows, and then you looked on the daily charts to see where your next potential profit target was. A lot of people got caught in those in the afternoon. And again, just put the market into the context of the trade there also. Next, we're going to look at Halliburton. What's going on in Halliburton? Very mixed picture coming into today. It's above the daily, the 20, the 15, the 200. Hourly is flat. Don't really have an opinion there. Closed below, immediately opened up above. 15 we were below, we went above. Not a great scenario across the board here. Minimum criteria would have been that 15-minute chart pointing in one direction. So maybe you can make a case for being long these two pushes to the upside here while the market was strong. All right, well, we come around to 12 o'clock here. This is where we have the change in trend in the VIX. So from 12 o'clock to 1 o'clock, and then ultimately that one last push to 2 o'clock, the VIX was pointing up, so that meant for sell shorts. So if we put this trade into the context of selling short, not until the afternoon is it below the hourly and the 15 that creates a good short. So this big push down here from 12 o'clock to about 12:45 was not actually the best trade because we were still just technically pushing down on the minimum criteria. This here is the trade that we were looking for in JP Morgan here. We pull back, get a little consolidation. You could definitely manage the risk here to 29.25 area. So you basically have a 10 or a 20 cent trading range here. And you push all the way down about 60 cents. Here's the next pullback. This would be a good short sale because you're pulling back here. You made a new low on the previous low. You'd look to short here looking for a new leg down. Now, the market actually starts to come in here, so the stocks don't follow through to the downside. But the point I'm making here is get the market involved in order to think you're going to hold on to good trades longer and pay attention to whether or not you made a new high or new low on the previous push. All right, those are really the two biggest ones that I want to talk about. I guess the last one here is IYR. The trade of the day here in IYR is when it actually bounced here, clearly below the hourly at that point, clearly below the 20 and the 50. Up until here, again, you're just trading with some momentum. Again, this hourly is not pointing up. This trade from here to here, looking for a retest of the low, and it actually follows through for about 90 cents is the trade. Okay, 1 o'clock to 2 o'clock, the trend is the VIX is making new highs, the market's coming down, and right around here at 2 o'clock is when we have the buy divergence. So if you had IYR, that was the trade of the day there. I will speak to you tomorrow.